Welcome back. Let's focus now on Mangalore Refinery and Petrochemicals. The company reported a good set of Q2 earnings with improvement in EBITDA and net profit. MD of the company, Sanjay Varma, is joining us now to discuss their performance. Mr. Varma, thanks a lot for joining in. If you can just start by telling us, there was a good improvement in the EBITDA performance this time around. What led to that, and what is the kind of guidance that you have for the full year now in terms of both top line as well as the margin performance?
Yeah, thank you. Good afternoon. Basically, Q2 performance was very nice, mainly due to the markets. Markets have given a good crack at this point of time. And incidentally, Q2 MRPL was under a shutdown, so we were a bit short of capacity utilization because of our, mandatory shutdown of one of our phase 3 refinery. But despite of that, we could make good use of the margins which were available in the market by maximizing the balance to trains of the refinery to the peak capacity, and that is the one reason. And mainly I would say that this is because of the upcycle of the market. The Singapore GRM was very nice, and historically MRPL delivers better than the Singapore margin, so we could perform better in Q2.
Right. So if you could give us a sense of the throughput in the second half of this year, will it reach the 4-5 MMT sort of mark? Has it recovered? And secondly, your margins as well, will they sustain above that $17 per barrel mark? You said Singapore margins were good and you do better than that. How does that work? What are the margins in terms of GRMs that you're expecting in the next half and the throughput?
Yeah. So let me just bring a background to this. The strength of MRPL is a physical performance. Barring the COVID years, if you see, MRPL capacity utilization is always above 100%. In fact, last financial year, we didn't have any shutdown. So we could crunch a capacity of 114% capacity utilization of the refinery. Same was true with the Q1 of this financial year, where we could do 117% of the capacity utilization. But due to the maintenance in Q2, we have clocked only 85% of the capacity utilization. Now, refinery after the maintenance is fully ready to scale up the throughput in the H2 of the current financial year. And we are looking for somewhere around 108 and 109% capacity utilization overall in this financial year.
Okay. Mr. Varma, can you just detail the impact of windfall taxes on your numbers this quarter, and what is the expectation of it, say, going forward in Q3?
Sure. So we have given, we have written the GRM of around 17.11 in this quarter. This is a net off of the windfall taxes. But if you, windfall taxes impact was around $2.38 per barrel. So if you typically see our refinery, overall GRM was around 19.49. And if you subtract 2.38 as a windfall tax, then the residual GRM what refinery could get was at around 17.11. So that was the impact of the windfall tax in the Q2.
All right. Can you tell us a little bit about the debt levels in FY24? I think your first half borrowings were almost at about 14,000 crores. By the end of FY24, where will the debt levels be, and what is the outlook going forward?
Yeah, madam, I would like to just go back 2 years back. COVID periods was really tough for standalone refiners, and we too also got impacted. And incidentally, during that point of time, we did acquire OMPL, that is ONGC Mangalore Petrochemicals Limited. So the debt of that company of around 9,000 crore was also came under our book. At that point of time, our debt was, this is around 2 years back in a similar time, maybe September 21 I am talking about. We had a debt of around 24,400 odd, which has been reduced to around 14,000 crore at this point of time. Impressive debt reduction of around 10,000 crore has been taken place in last 8 quarters. And our debt to equity ratio, which was at a peak of around 6.8 at that point of time, has been brought down to around 1.17 at this point of time. And the kind of the cash generation what we are having, we are looking forward for somewhere around debt to equity ratio around 1 or below than that by the end of this financial year.
All right. Debt to equity comes down from 1.17 currently to around 1 by the end of this year. Also, the forward integration plans that you had, you were looking at retail outlets as well. Will you be looking at the marketing segment too? Because you did say that you are looking at nearly 1 MMTPA in terms of domestic retail market. You have advertisements rolled out for about 1,800 retail outlets as well. You plan to add another 500 retail outlets in the next 3 years. So that's all your stated policy. What further can you tell us apart from this, and what would your investment entail in the marketing and retail segment?
Yeah, sure. So this is the stated policy, and we are looking for, having our marketing footprint, sales through our marketing footprint of around 1 million metric ton of petrol and diesel in next 3 to 5 years. And we are aggressively going ahead. At this point of time, we have operationalized around 75 retail outlets, predominantly in the state of Karnataka and Kerala, North Kerala. And this 1,800 ROs which we have advertised are capturing Tamil Nadu, Kerala, Karnataka, and other adjoining states. We are also coming up with one marketing terminal near Bangalore, a place called Devangundi, with investment of around 3,000 crore. So that will make us competitive as far as the placement cost of our products are concerned at Bangalore. And from there, our distribution network will be, taking off. And that project is very near to a mechanical completion. I think in Q4, we will be commissioning that. So that will bring an edge to our marketing endeavors.
Okay, all right, Mr. Varma, we've run out of time, but pleasure speaking with you. Thank you very much for joining in and speaking with us. So that's the management of MRPL.